4 years ago, this past May, former President Donald Trump made this prediction about the U.S. economy.
And you know what? I'm not so far away from that again, believe it or not. But if Biden gets in, the market will crash.
Turns out he was right, and since then, he has dubbed this the Kamala crash in his post on Truth Social. So, Carol, what is the GOP going to be focusing on? Shouldn't it be this with the economy right now?
Yeah, so I'll take a little bit of issue with that, Jill. If you look at what the stock market has done overall, it actually has done quite well, but that has been juiced by inflation and 15 years of zero interest rate policy. Yes, we're seeing it come down now, but overall, it's done pretty well. And I would always kind of separate that right now, because of the disruption to the stock market, it isn't the economy. But I think the economy itself, which has been an absolute disaster under Joe Biden, is exactly what Trump should be focused on. First of all, we know that Joe Biden hasn't been running the country for the last however many years, and whoever is the puppet master has just now changed the puppet out front. So we're going to get 4 more years of the same destructive policies. And so staying away from the identity politics game, which is a losing game and gets the Democrats focused on exactly what they want, is a losing strategy, but focusing on what everybody is feeling, that is the fact that they're struggling to pay the rent, to buy food, to have basic cost of living, that they can't buy a house. That is the type of messaging that is exactly going to win Trump another election. And that's where he should be entirely focused for now until Election Day.
Now, Donald Trump's team wasted no time putting an ad out for this. Here is Donald Trump on Bidenomics.
Here we go. Look at them go down. What some would call history in the making.
Scary. Don't say that.
We have never been down 1,000 points ever, not even intraday on the NASDAQ.
Bidenomics is working. It's working.
The stock market just taking a big old nosedive this morning.
Dow Jones is down about 1,010 points.
That is called Bidenomics.
The Dow fell more than 600 points Friday on a weaker than expected jobs report.
5%, Meta 6%, Amazon 6%, Apple 9% down.
Bidenomics is working.
Fears of a recession began after Friday's disappointing July jobs report.
Bidenomics is working.
A rise like that is historically a sign that a recession is imminent.
This is Bidenomics.
What you're seeing right now, the stock market, is what Americans have been feeling for the last 3 years. It's just a manifestation of it right now.
All that is called Bidenomics.
It looked pretty effective to me, Carol. What do you think?
I think it's very powerful. And one of the things that it does with Kamala Harris continuing to say Bidenomics over and over again is it really makes her responsible for those policies. It doesn't allow her to separate herself and say, no, I had no part in this. She's out there touting that this is working and this is working. And whether people are focused on the stock market or focused on the grocery store, the gas station or rent or whatever it is, the fact that she is responsible for this, is the same administration, the same policy, is exactly where they need to be. It's a horrible thing that we have to put it out there, but that is the reality of the situation, and it is only going to get worse for middle and working class Americans if something isn't changed.
Carol, I'm curious what you think her response should be. What should Kamala go out there and say, given that, in my mind, I'm imagining her going out and talking about Venn diagrams and making a metaphor about wheels on the bus. Maybe we get some falling out of coconut trees, be fantastic. But what should she say? I mean, what possible out does she have?
So again, my issue with stock market versus economy is that they're two very different outcomes. And unless the stock market continues to trend down, if I were her, and I'm not trying to give her points, but I would go back and look at the stock market over the last few years and look at the cumulative returns and say, yeah, the stock market sometimes it goes up and goes down, but we have grown by X amount since the time that we've been in office. Now, granted, she would do that on a nominal value basis, not adjusted for inflation, which makes it look not quite as good, but that's what she should be saying. That being said, I don't think she has the depth of understanding or the ability to communicate like that. So as you said, Matthew, I would imagine some sort of a circle with hey, this is the part of the Venn diagram that I'm in charge of, and this is her Venn diagram, and space and clouds and things like that. And I think that's probably what you'll get. I think she just will completely sidestep the issue.
The stock market versus the economy. We can jump over to the economy side because we know that the United States has a 70% consumer-based economy. And the latest numbers are that 1 in 3 parents right now cannot afford back-to-school items for their children this year. And 35% of those families are trying to put this on their credit card just to make sure that they can get their kids what they need to start in school. So where does this go from here?
Yeah, I mean, this is at a time where we have record credit card debt, where the personal saving rate continues to decline and is lower than historical averages. And it is really challenging. The big issue is that when you talk to the quote unquote economists or the corporate press, they're going to put out figures and say, oh, it's not that bad for most Americans. And they're taking averages that are being lifted up by the wealthiest Americans, by the Americans who have lots of assets that have increased and inflated in value over the past few years. And so it's not really a good representation. And it is not only gaslighting, but a gut punch to middle and working class Americans who really are tapped out. So the question is, do those people who have lots of wealth and disposable income and those assets, are they able to continue to keep the economy afloat? And that goes back to what we were previously talking about. To the extent that you continue to see the stock market go down, or if you see any sort of movement down in housing prices over time, that's going to create a pause for those consumers saying, well, I'm not feeling as wealthy as I was before. And that will help them pull back on their spending, which we know is one of the 2 pillars, along with government and government adjacent spending, that really has been propping up the appearance of growth in the overall economy. So we are really on shaky ground here. This is not the strength that is being projected in terms of the numbers. And, overall, the financial position of the United States is on tenuous ground. So we really do need to get an administration in place and people in Congress who can work together and shore up our fiscal situation, because it is going to be ugly for Americans for many years to come, a different quality of life that is not the same level that they're used to if we do not get our hands wrapped around this.